The Merchant Tech CEO Confidence Index recorded its biggest drop to date as it fell 10 points in the second quarter. That's amid resurgent concerns over market conditions and a general lack of confidence in the health of the global economy. So for a look at that index, which gets the views of CEOs, we're joined in studio by Rick Irving from Merchant Tech Capital. Hi, Rick.
Hi, David.
We have lots of indexes telling us about confidence and other things. The Merchant Tech CEO Index, before we talk about the numbers of it, who does it survey? How does it work?
Sure. The Merchant Tech CEO Confidence Index, it's been around since the second quarter of 2009. And really what it is an index that collates views of top CEOs of South African companies, predominantly from the listed environment, but also top private companies, and really shows how these business leaders perceive economic conditions moving forward.
So it's not about what's happening, it's about what they think is happening and their own feelings. Now, you say that the index dropped 10 points to 55 in the second quarter. Give us a context for that. Where was it before? And for that matter, how long has this been going so that we can compare?
Funny enough, in the first quarter of 2012, it had its largest surge to reach a record high. So it has now dropped 10 points or 15%, and it's so relatively low of where it's been, but definitely the biggest drop to date.
So now, why has that happened?
I think really it's the economic conditions component of the index that's really filtered through into the other components and through into the other sectors. Largely our economic conditions being affected by the Eurozone, and really that Eurozone uncertainty. I heard Mohammed alluded to it earlier and even used the word uncertainty. But really with Europe accounting for 1/3 of South Africa's trade and really being our largest major trade partner, this uncertainty has dented the confidence as a whole. So, definitely looking forward to the 17th of this month, all eyes are going to be on Greece and when they go to the polls and what's going to happen there. Really what is going to happen, it's unclear, and that builds on that certainty too. So whether they're going to vote against austerity and potentially vote themselves out of the Eurozone, I don't know. But, stranger things have happened. Funny enough, someone said to me the other day, they said that, all this...
Just looking at, while you get your train of thought there, looking at Greece, isn't too much importance being placed on Greece? I mean, it's almost like a cup final now, and it's going to. You can place too much importance on one event. There are lots of things going on. Lots of things going on.
The majority of those things, going on in Europe, though. So also with Portugal, Italy, countries on the outskirts like Ireland, as well as Spain, and with them now. Needing assistance there. So I think definitely Europe, also the cooling down in China. Sorry, bringing back to the point that I was trying to think of earlier. Someone the other day was telling me that the euro is already dead and now they're all just bickering over who's going to pay for the funeral. So I think it's all these contrasting views that together are really compounding that uncertainty. I don't like to use words like panic, but there's definitely fear in the markets relating to Europe. And, I think right now, one might say the only certainty is uncertainty.
Yeah. I don't know if you saw Nikki Weimar's graphs a moment ago, but our exports to Asia have gone from something like 15% to 40% over the last 15 years, and our exports to Europe have gone down from 40 to 25. So the graphs are crossing like that.
Right.
Doesn't that modify what you said? And perhaps our chief executives are not aware of this yet.
Definitely China also playing a big part. And, going back to our index, our consumer goods and consumer services sectors were the hardest hit. We had a 27% and a 24% drop respectively. So they were the biggest fallers there. So, I think largely this is to do with our exports, both to do with Europe and China. But also on the local front, steep increases in April, petrol, taxes, electricity rates, levies and the like. Definitely having an effect on the consumer and the consumer spending.
Now, you do say that 70% of CEOs in South Africa feel that their business is more affected by economic conditions in Europe. So we've kind of dealt with that. But that will steadily change, will it not? And they will have to increasingly look at exports, both manufactured and commodity, to Asia.
Yes, indeed they will. We posed the question to the CEOs, knowing that Europe was going to come out on top. We didn't realize, to what a degree it was, 70% being quite high. But yes, with the graphs that Nikki was speaking about earlier also, and that crossing, it is definitely going to, towards the east and other countries, going to have more of an effect moving forward.
You make an interesting remark. You say the higher levels of confidence in the first quarter, which you say was a record, so it must have been about 65.
Yeah,
you
65.5 it got to.
Results of the improved levels of confidence, the result of expectations of improved conditions in the future, not necessarily a result of activity. So it's optimism rather than a hard look at what's actually going on.
Correct. And, historically, if you have a look at the graph of the index, it is always in the first quarter of the year, whether we call that the January effect or, what it is. But after, I think, a hard slog of a year, CEOs are generally optimistic about the future. But yes, definitely not necessarily as a result of their, operating conditions, but as a result of this expectation that they have for conditions to improve.
And the expectation clearly has not been met, and hence the drop in consumer goods sector. Now, all of these indexes have subsectors. Yours does. The largest decline of confidence, showing a 27% drop. That seems dramatic.
27%, yes, the highest that we've had.
This is CEOs of consumer-oriented companies.
Correct. So, as I alluded to before, so the consumer goods, one, to do with the exports, to do with these countries, Europe and China and whatnot. But, also, with all these rates and increases, lots of pressure on consumers, which then puts that pressure onto your retailers and as well as the service providers, because consumer services sector is, just a little bit behind with a 24% drop.
What effect does this index have in the sense that, or rather, what can we expect the effect of such optimism or pessimism to be? I mean, if CEOs are feeling like this, that will affect their behavior. What's your experience of how they behave?
What we do in the index is when we compile a whole report, which is very interesting to notice, is that we take the sectors and the confidence per those sectors, and we put those against the actual JSE indices relating to that sector. And there's such a close correlation between them. So, there's a definite correlation there, and, that definitely has an effect going forward. In terms of going forward, one interesting part was that the financial sector of the index, they actually didn't record a decrease in confidence. They actually had a 1.5% increase. I think this was largely due to the fact that they were the most cautious in the first quarter. They had the lowest increase out of all the CEOs there. So perhaps they didn't have an overly optimistic base from which they could fall. But also perhaps some positivity there that, a very important component of the index being the financial index, they were actually, recording increases in confidence. So, perhaps not all doom and gloom, and perhaps something to look forward to there.
Given the volatility of the currency at the moment, given the yo-yo effect on some of those share prices, although they're not moving very far, but they are going up and down, does your index reflect volatility so that just as we've had a fall now, let's say something happens in Europe, that let's say the Greeks vote for austerity like Turkey's vote for Christmas, and everyone gets very positive like they were yesterday about the Spanish thing, and it's sustained, you could equally have a huge increase in your confidence index because it's how people feel.
Correct. And, we definitely see that with our CEOs. We don't publish it to the market or anything, but just as an interesting exercise, we've seen CEOs who have participated in a number of our questionnaires. If we had to look at their share price in relation to their confidence, there's a huge correlation there. Very interesting to see.